Okay, so DeFi for beginners. All right. First, what is DeFi? I'm going to define decentralization, which is the process by which the activities of an organization activities of an organization are distributed or delegated away from a central or authoritative location or group. Okay, that's like let's use the presidency office for example. You, instead of now having one president that gives all the commands for each state, you now have what we call we like call it sub presidents or something. Okay, now nobody's other authority overrides the other person. It's all based on mutual and let me call it mutual agreement. Okay, so the power that President A has is the same power President A, B, and President B has. Is the same power President C has. Okay, nobody can override the other person. Is that clear? That is what decentralization is. Power belongs to you, power belongs to me. Power belongs to Ayo, power belongs to Fortunate, and that's how it is. Equal authority distributed to everybody, okay? So you can see that this is a branch in crypto, which was created as a getaway from traditional financial services, okay? A more concentrated look. DeFi deals with smart contracts, okay? Smart contracts are codes that are written on the blockchain technology, all right? And this enables decentralized applications, short form dApps, and project protocols to run. But the fact that you can swap BNB for USDT on PancakeSwap or Trust Wallet is the ability is as a result of smart contract application coding. Okay. And then DeFi Foundation dates back to 2009 when BTC was actually created. DeFi, however, offers as much as the services of the mainstream financial world, like our big banks and small banks as well, but not as one man gain or control. Here we have decentralization in it. Nobody, the bank cannot control the amount they can give to you when you request a loan. Like you see what they are doing now. If you go and request, you have 100K or 200 million in your account and you go for withdrawal, they will not be able, they will be telling you how much they will give you for money that you actually saved, your hard-earned money. They'll be telling you that they can only allocate maybe 100K to you or 20K to you or 10K. At the point, they were even giving people just 10K or 5K. Can you imagine? What would somebody use that to do? Someone that has over 5 or 10 million in their account. You get? So, but rather, it gives a common man equal power and opportunities the central power possesses. All right. You are actually in charge of your finances, your financial life. You control how you move your money. You control how you spend your money. You control when you can decide to spend 1 million naira now, and you won't need the bank to determine or I will tell you that this is the amount they are going to give you. You can sell it on, use it and transact and get whatever you want, no matter the what it is. All right. So decentralized finance is an emerging ecosystem of financial applications and protocols built on blockchain technology with programmable capabilities. That's where the smart contracts comes into place, such as Ethereum and Solana. Okay, and transactions on blockchain are executed automatically through smart contracts. Okay, which includes the agreements of the deal. Now, the agreement of the deal is when you click on when you're trying to swap on Solana, they will ask you, "Are you sure you want to confirm this transaction?" Or they will, I think that's what you see, and then you now claim on swap or confirm. All right. When we're having a live analysis, I'll show you all these things so that you know what they are, or you know how to make use of it. Because when I tell you go and buy a coin, nobody's going to ask me that kind of question like where do I get it? If I drop the name, you run your research and look for it. Okay, that will be when we are done with the basic research class, and you'll be able to find any coin as long as you just have the name alone, and you're able to locate what ecosystem it is, whether Solana or Ethereum, the exchange or market where you can buy it, and so on. All right. So DeFi, however, is an ecosystem which cryptocurrency financial institutes are built upon without an intermediary. It's me and you that is making the deal now. We don't need a middleman or third parties like our banks. All right. And DeFi started actually through lending, but now DeFi has spread into our personal and daily life activities, which includes sports, trading, and etc. All right. So now we move into privacy and regulatory scheme in crypto. The topic of privacy, regulation, and security is a big and a very hot topic in crypto, right? Because of some fraudulent activities that have been recorded over time, wallet hacks, people funds missing from their wallets. You can check out the case of FTX, all right? Where and some other exchanges that made away with people's money because of they were not trustworthy or their scheme was fishy. So privacy and regulatory scheme in crypto is actually a confusing and controversial topic because the main purpose of crypto is decentralization and centralization is privacy. Now, trying to find a balance with privacy and regulating the whole crypto community, markets, both decentralized, both DeFi and decentralized exchanges and centralized exchanges like Binance, actually takes away the whole purpose of decentralization, which was actually the reason crypto was created. So you can see that privacy in crypto is a hot move and topic. Also, one reason decentralized finance and blockchain exist. Though some coins like Monero offer enhanced privacy, but the regulatory scheme and bodies aim to prevent illicit activities. You get, they are trying to stop scams happening in the crypto space. At least that's what they claim they are here for. And to some extent, they have been able to recollect people's funds that are lost. Like, FTX say that they were going to start refunding and reimbursing people's money after they went into bankruptcy. But the whole thing was a scam. So after all the probing and the arrest and the investigation, they say they will start refunding people's funds, those that had funds in it. You get, they didn't have any backup plan for in case of just like Binance. Binance has a backup plan for as much as millions and billions of people on their platform. Okay, if they are to shut down tomorrow or something happens unexpectedly, they have a plan put down to reimburse people as much as they can. But FTX didn't have that at first, and they just made away with people's money. But due to the regulatory scheme that the government bodies are introducing, they were able to probe FTX owner to the extent, which is Sam Fredman, right? To the extent that they have agreed that he was going to reimburse people some part of their money. Though he's in jail, okay? So far as I know, I think he is. But the actual purpose is to prevent illicit activities aiming to booster security within the blockchain. But at the same time, this purpose is violating the actual reason why crypto was created, which is decentralization. So far now, finding a balance between them, which is privacy and regulating crypto, then remains a case study with no permanent resolution because some projects won't let you have access to their database based on the number of crypto holders they have, number of those trading on their platforms, because the actual purpose is decentralized. Me and you staying off the radar, So we move in. Crypto security now. This happens to be a very crucial topic due to cyber attacks and wallets drained over the past 2 years, crossing a large sum of more than $200 million. Okay. And just recently, one crypto guy was following. He had about $15K moved from his wallet, though he said he hasn't interacted with any scam links or even connected the wallet to any decentralized application. So, so far, as much as I can remember, they are trying to track how the funds is being moved to help him recover it. Like I mentioned, they will do this with the help of the hash of that transaction. Okay, if it's on Solana blockchain or Ethereum blockchain that they used to move it, you will have to follow and get the hash, and that way they will be able to see how far the money has been moved and if there's any hope of recovering it. All right. So back to what we're saying. This goes to say that security of personal crypto holdings relies on me and you and the measures that we take while interacting with protocols and links. Okay, let me use for example now. If you go on Twitter and you search Venom, okay, which is they are project that are about to airdrop, I'm very sure that you're going to see different accounts on Venom. All right, there will be different accounts, and some of these accounts are fake. There's a first name on the Twitter, and then there's the @ name, the one that has the A in circle. You have to watch out for that very name. Okay, that's @ spelling is where your concentration should be, because they might spell it in a way that if you're not fast or you're eager to just click on any account that you see that has the Venom username, all the links on that fake account are all scams. And if you don't take these measures while clicking on links found, you can connect your wallet to a fishy protocol accounts. All you have to do is just sign the transaction, and trust me, even if you send $5 there, it will move out automatically. As it's coming in, it's going out. That's to tell you that hackers are even working harder than crypto traders that are trying to make a living, honestly. Because if you're not, that's why this security that they keep talking about, anybody that tells you about crypto and doesn't tell you about crypto security does not love you as much. Okay, you have to take the security of your assets personal. When you open a trust wallet, there's things called recovery seed phrase. Those should only be known to you and you, and don't go to save it on your Gmail, even on your phone. Okay, get a paper, get a book. I have about two mini this rubber what product is this? This notebook that has a plastic cover. There are two that I used to write down my recovery seed phrase way back from 2021. Okay, the first one is filled. I started with another one. All right, this is how you keep your stuff personal. Those that I put on my notebook, Google Notebook, I wrote them down and cleared it because it's people that develop these apps on our phones. And if you know anything about coding, you know that there's front end and back end. Anything that I'm doing or saving on that, all the data, all my emails, everything, people have access to it, whether I like it or not. You understand? The privacy that they tell us is no, we don't actually have the privacy. So something like this is where you have to take your security and privacy serious. Always write down your recovery seed phrase on a hard paper, not on your phone notebook or your Gmail, sending it to maybe another of your Gmail. No. Once somebody gains access to that Gmail and then the person knows actually what he will see or knows what it is, especially when he sees a combination of different words, he's going to try and start putting them, open a new wallet or importing a wallet and input it. And trust me, maybe where you are now, you have $500 inside or $1,000 and you're sending him more. You're just going to wait when you've accumulated as much. All you do is he already has access to your recovery sheet phrase. He approves the transaction and moves everything that you have there. Trust me, you're going to start wondering how come. Okay, but you don't know, probably mis you've misplaced or saved your seed phrase in the wrong place, or somebody already has access to it. When they have access to your seed phrase, even if the wallet on your phone has a password, as far as they install another wallet and just that seed phrase is all they need, they don't need your password. Once they put that seed phrase on their phone, wherever they are, the person can be in Cotonou, can be in Las Vegas. Once you put that seed phrase, you can be seeing everything happening on your wallet and you can move your funds. Okay. So for decentralized wallets like MetaMask and Trust Wallets, protecting our recovery seed phrase, which is what I just talked about now, and this seed phrase around 12 to 24 random words, is paramount. If this recovery seed phrase is in the wrong hands, all funds will be accessed from another mobile and transferred without a password. Okay. So that is that on crypto security. Take your security serious. When you're farming airdrops or hunting airdrops, be careful of the links you click. If you see, like one guy sent me this Ion Telegram stuff, and I was telling that one of it was worth $2. I told him, no, bro, one of that coin is not even worth up to $1. I just entered my research app and brought the app screenshot and sent to him that what the one you're doing is wrong. Have you tried swapping it? He said no. You can withdraw it to your wallet, but if you just try and swap, they will collect the matic that you saved. They will collect it from you, but it will not actually. So unless they tell you it's failed transaction. I've experienced such one time with Net on Binance Smart Chain. So far so good. I know a scam when I see one, as it stands now. So you cannot just send me a link and tell me this is the one raining. Nah, it only take me less than 2 minutes, and I'll tell you if it's legit or if it's scam. I go into my research tool. I go to Twitter. If the search tool is not giving me what I want, I enter Twitter or enter Telegram. I find what I'm looking for. 5 minutes should be done. And that will now determine whether I participate in what you sent to me or not. Okay? So that is that. Moving forward to Web 2 and Web 3. So in a simple way, we all know what Web 2 is. Web 2 is the actual internet, which how do I put this now? The Facebook and the Twitter that you and I know about. Okay? Web 2 doesn't give us as much privilege as Web 3 does, okay? So let me say now, Web 2.0 describes the current state of the internet, which has more user-generated content and usability for end users compared to its earlier incarnation. All right, Web 2.0 generally refers to the 21st century internet applications that have transformed the digital era in the aftermath of the dot-com bubble, which is our Facebook, which is our Google, which is our WhatsApp, which is our what else? All right. So Web 2.0 doesn't actually um have us in mind. Now let me take you to Web 3.0 so that I'll be able to differentiate this as much. I'm trying to redefine it and give us the best knowledge possible. Okay. So when we're talking about Web 2, when it comes to crypto, in a simple way, it's the big companies and the central control. Okay. They gain big on us and share close to zero revenue with us, yet they mine our data and online activities for big gains. Yeah, you must have heard one time that they said when you're in a discussion and you just mention something that has to do with um one maybe toothbrush or bag or clipper, you open your Facebook and the next thing you're seeing ads that has to do with toothbrush or you're seeing ads that has to do with clipper. Okay. Now these guys take this and sell to big companies, advertising companies, and the next thing you're seeing Jumia advertising to you, you will see Amazon advertising to you, or even some other companies that you haven't heard about. Now, the essence of Web3 in crypto is all about decentralization and putting power back in our users' hands. So, okay, in Web3, we decide what to share and we get rewarded a fraction from the revenue generated by these companies. And we optionally agree to share our data online and online activity. Um, like me now, this grass and Helix, I'm mining grass is an extension I installed um on my Chrome browser. Okay, and like this airdrop farming is going to be ending tomorrow. Okay, now over the period of time, I've accumulated some grass, and now this grass they make deal with all my browse history, and they are able to use that to modify the ads or information that they show to me whenever I'm online. Okay. Now you'll be seeing different companies that will be advertising to me, but I am getting to be paid, rewarded the grass token, which will have value from tomorrow onwards. Okay. So Helix already is like the senior brother to grass. Helix did really wonderful. And not so many people did that one because it was years ago, even before the bear market. Okay. So this the essence of being educated about Web 2 and Web 3.0 in crypto in general is so that you can differentiate, you know, and understand that crypto is way vast than we think. Anywhere you put head in crypto, in anywhere, anything that you have your hands doing in the real world, okay, in the real world, when you come to blockchain technology, is already there. I think there was a time that they were debating if voting should become a decentralized stuff. That is, it should go on the blockchain technology, which it can neither be manipulated or changed. If that had happened, trust me, I'm sure we'd have had a different president by now. But that's by the way. So currently in progress, it is Web3 is a vision of decentralized and open web with greater utility for its users. Okay, unlike Web 2.0, which is the second and current generation, which succeeded Web 1.0, which was in the 1990s and early 20s. All right. Um, Web3 has set of values and technical applications that define a new era of the World Wide Web. Prime Web 3.0 examples include ubiquity, decentralization, AI, blockchain, and connectivity. All right. So Web 3.0 is a very big topic on its own. If I should keep explaining and giving more details, we might run out of time. But with this explanation, I hope everybody got the explanation. You can tell someone what Web 2.0 is and what Web 3.0 is when it comes to crypto. Continue. So trading psychology now. This is all about how our emotions and thoughts can mess with our trading decisions. Okay. Fear and greed are big culprits here. You understand? Which, if we do not cultivate and train ourselves, can lead to bad trade choices. What are bad trade choices? Like maybe when I start giving signals, maybe you come and in order not to miss, instead of you to calm down, open your app, try and do some little assessment, know the amount because normally we advise everybody to use 10% of their portfolio for every trade. Okay, and then you manage your loss. Some of the losses after technical analysis are not even up to 5%. For anybody that is using the 5% or 10% loss target, that person must have used must have a very big portfolio, and that person will leave his trade on cross instead of I'm using on cross portfolio instead of using an isolated margin. Okay. Now, when we get into how you can trade futures and spots, I will explain what cross and isolated margins are. All right. So going all in is very wrong. You see a signal that was dropped by 2 a.m. and you're waking up by 5 a.m. Instead of you to check the price it was at 2 a.m. and the price it is at 5 a.m., you just go all in because you're scared, or maybe you're afraid of missing on profit. But you might only just be going in there to actually dash if just dash the market your money. So you have to be very careful when you see signals. Watch the time it was dropped. Know how to read charts sometimes. Okay, when we open the Binance app, any coin you click, you're going to first see a chart, and then you see the buy or sell or long or short icons. So try and know the time, because if you put your finger on that chart and you move slowly, you'll be able to see the time. You can see maybe March 4th, 10 a.m., 10 p.m. and the rest. So you check when that signal was dropped and you check the price difference as of regarding when you saw the trading signal. Okay. Then there's another issue, which is panic selling. These people are the paper hand. Okay. You open a trade and you're seeing -5%. Whoa. No. That's what your mind will be telling you. And the next thing you sell and you're selling in loss. And then you come back and you see that coin you sold had gone up more than 25% or 30%. On futures, you might be seeing that it has gone up more than 100%. And you'll be wondering, why is it that always when I sell that the coin will pump, and then when I buy, it will dump? You understand? So avoid going all in, number one. Avoid panic selling, and then have a trading plan. When I say have a trading plan, I mean have a trading plan. If your portfolio is $100, you can set a plan to take just 2 trades a day, 5 trades a week, and then you can make sure that for each trade that you're opening, you're using 10%. 10% of $100 is $100 is $10, and then you're losing. You can set your stop loss to be 10% also, which is -$1 or 15% or 20%. Then another thing you have to look at is your risk to reward ratio. If you're risking $2 for that trade, at least a minimum of risk 1:3 risk to reward ratio, which is that two now you're risking to make $6. Okay, these are achievable goals that you need to set so that you don't blow your account, you don't lose all your money trading, and then you see the person that dropped you signal 1 hour or 2 hours later, you drop screenshots of profit and loss, and you're seeing plus 30%, plus 40, 80%, and the rest. And you'll be wondering, it's a lie, it's edited, all those kind of things. No, he actually bought in and he held his position because he was very sure of it. And minus being sure, he had a trading plan. He has set achievable goals. Okay. Now, why I said you should set achievable goals and have a trading plan, if you take 2 trades that day and they both hit loss, take break and learn from your mistake. Don't let your emotions get a hold of you and you're like, no. If you're going in like that, trust me, you're going to be losing more money than you think. And before you know, your $10 will become 70. Before you know, it will become 50. Before you know, you'll be seeing $10, and next thing you'll be crying that crypto is scam, this and that. Okay. One thing, you should have a long-term plan, because this long-term plan helps you to prevent emotional trading. Okay. What I always tell myself is just try and stay in the game. That's one thing I always advise myself when I'm running my analysis. Try and stay in the game and wait patiently. Okay. I've set some trades that didn't get to peak, and the trade went and beat my take profit. Well, it's better I miss that trade than the trade picks up my entry and also hits my stop loss. So you get, on the bright side, I still have my own money in my portfolio. The only bad thing, which is not actually bad, is that I missed the trade. Why is it not bad? Because I can still analyze another coin or another trading pair and still use my trading plan and enter. If you set 10 trading plans, if you do 10 analysis on 10 different pairs, it's not possible 5 or even more of it must hit, because patiently you must wait. Okay. These days I kind of use cross margin, because now every coin has the ability to push. Okay. And I set my take profit open and my stop loss open. Okay. The reason why is this, I'm also observing my portfolio, because some trades I've been holding it for weeks, like the YDX, I've been holding it for weeks, honestly, and it's up 200%. Okay. I've been holding for weeks, and I'm still holding it till that coin hits $10 before I close. Okay, it did well in the previous bull run, and it's going to do well, I believe. So this is one thing with having 10 long-term plan, because to help you prevent emotional trading, to help panic selling and stuff like that. Okay, take breaks for perspective and well-being. Always being on the chart is going to mess with yours. So you have to take breaks for your mental health and your, because you always have to think long term. You have to think, if you have the ability to stay in the game without blowing your account, even if you're taking losses 10%, 1%, 5%, as far as you're learning from your mistakes and you've not blown your account, you've not traded with your emotions where you like, let me just open this trade. If it goes to loss, let it go. You know, that kind of a thing. Because when you made a loss 1-2 times and you're looking at your $10, your $50 portfolio, and it's looking like $15, you're like, what is this one? Let me just shoot my shots and see what happens. No, you do the trading like it's a serious business. Okay, you take it serious, you take breaks, you learn from a mistake, you do your weekly analysis. Where did I get it wrong? Did I panic sell at this stage? Did I panic buy? And stuff like that. Okay, so we move to the next section. We're almost coming to an end of this class. We have the basic research in crypto. This is fundamental analysis, which includes on-chain metrics, which helps to determine holders and etc. It is the